Jim, the market is down over 200 points.
Yeah, it's panic today. This is the fear of big sellers. Watch the transports. Helene Meisler, always great, by the way, on that. The transports are horrendous. I care about the transports. I've been saying fear of big money, big selling is the dominant theme all week. We're doing our first little buy here, fractional alerts. We can talk about that, but we had held off because we had felt that this is a bad time. We've been telling some people that, look, the market's going to be under pressure. Today's a fulcrum day in the sense that you want to see whether there's margin selling. So we're going to be watching between 1 and 245 for a little clue. But right now, I see stocks to buy, but I know that I can't make a statement bottom because we haven't had our crescendo yet.
You wrote about market cynicism in your Real Money column. Now, can we talk about that?
Down. All right, so J&J has a new drug, and it's the first new drug since 1987 for major depression. If you want to see how hard it is, take a look at Allergan. Allergan's going up, by the way, speculation that it's going to break up. I don't think the speculation is founded. But when I look at what J&J did, which was really miraculous, and Gottlieb put this through, we missed Gottlieb, he really jammed it through. Why? Because there's 40,000 people committed suicide in this country last year. It's an epidemic. And this is an anti-suicide drug. Now, primarily it's a major depression drug, but the people who Prozac doesn't help are prone to suicide. And we got to stop the prone. And so if you're ideating, this is the drug for you. I think it's really, really important. And the stock's down. That's the kind of market we have. Allergan fails in its major depression, stock goes up. Now look, J&J is also, every time, if the stock takes out 140, I think the plaintiff's bar is going to put out something against Halk. But I've got to tell you, we are oversold for the first time this year. There's tremendous fear, not of missing out, but a fear of big sellers. And after a couple days of that, the big sellers say, you know what, the market's down so much, I don't want to sell it anymore. A lot of our stocks that I really like, I'm looking at Disney, it was a 115 yesterday, it's 113, maybe that goes to 110, maybe it picks some up. But I'm outlining, because we had sold some higher, I'm outlining a scenario where, as you can tell, I'm not talking about negative fundamentals. Because in the actual negative fundamentals today, we had Kroger. Kroger was bad. I don't have a lot of info. I don't have anything. Kroger's made some personnel changes that are positive. I'm desperate for Kroger. Don't have anything. Desperate for the banks. Have nothing. Desperate for Burlington. Something positive. Have nothing. But maybe there's a sea change in retail because Abercrombie was good, Kohl's was good, Target was good. But I lack ammo to tell people to buy, but I also lack ammo to tell people to sell.
Helene Meisler wrote that people are getting complacent in this market. Do you agree?
No, I don't. I think that the fundamentals were too good these quarters. We had too many companies reporting good numbers for me to say that that people are complacent. What I will say is that there is. I wrote for Real Money when in 1991 we shut down the fund after having a really big February. We were up so much, all we could think of was not giving it back. And I think that's a lot of hedge funds did that too. And at a certain point, they're going to have given it back and it'll be too late to sell. So let's watch levels. That's what I care. Now, Helene's my friend from 1986. But I disagree that there's complacency. What I would say is that if you were complacent on Dow DuPont, okay, the numbers in the last 2 months were very good. So do you sell it at 53 because you were complacent and you should have sold it at 56? I don't think so. You had a China deal, you got 2 good months, maybe the destocking's over. You're going to look at, and that's an actual name, that's why I'm picking on it. You're going to look at that stock and say, wow, I sold it at 53 because I was complacent, but I didn't get 51, so I never got to buy it back. And that's my fear at a certain point. There are certain stocks where the fundamentals aren't good, anything related to auto. I'm not drawn to 3M. Okay, just can't be drawn to it. I'm not drawn to GE because GE was up 55% going into the talk with Culp, and he's got a long-term care seminar today. It's not really what I want to own. But I think that if you go down too big today and the transports finally give up the ghost of the selling, the transport's down 124 points, that's a little aggressive, and I don't think it's warranted. I would look at Union Pacific at a certain point. I'm even attracted to FedEx soon. So I'm not on the other side. I'm going to take the other side. Not yet. Watch what we do, action alerts. Not yet.
But why FedEx?
Because I think that in the end, Amazon can only destroy so many companies. We did a big riff last night on Mad Money. about how if you sold Cisco on that Amazon was going to move into routers and telco equipment, well, you missed a gigantic rally. If you sold AutoZone because they were going to move into auto parts, you missed a gigantic rally. I'm not going to say go buy Kroger because Kroger has problems of its own.
Which is real money stock of the day.
Yeah, it's problems. That's why that was very prescient that we did that. But I would point out that the retailers, are the good and the bad, are going down, and that's not right. There was a piece today that recommended a sell of PepsiCo. Is that complacent? I don't think so.
Do you think that Amazon could kill Kohl's? I mean,
No,
not Kohl's, sorry,
they're
Kroger.
Look, Amazon, it was an unconfirmed story that Amazon is going to open chains of stores. And my contacts at Whole Foods were quite surprised because what that would mean is that Amazon was going to compete against Amazon. And I don't think Jeff Bezos is that distracted.
What do you expect from Costco's earnings after the bell?
Well, we talked about Costco with Carl. I expect a good quarter, and I don't think anybody cares because we're in that sell mode. And I'll give you an example why. Take a look at Walmart. Walmart was at 97 when they reported unbelievable numbers. Unbelievably good. I think Walmart's doing incredibly well. And the stock jumps up 3, and now it's back to 97. So what does that say about what Costco has to do? I mean, Walmart blew it out, and the stock's where it is. So what can Costco do? With this mindset, we need the whoosh, we need the crescendo, we need to see the Dow down like, I don't know, we need to see it's down like 400. We need the transports down like 200. We got to make it so that we get to a level where it's no longer, you don't fear sellers, you fear not being in a bottom. And we're not there yet. We're not there yet. I mean, I look at a Goldman, and Goldman's through tangible book, but then immediately as it flips through tangible book, people are saying, well, you know what, if you subtract Malaysia, it's not really a tangible book. There are so many reasons to sell right now, but there won't be soon. That's what I'm saying. We will price correct, and people who remember the rally from the pivot of Powell will say, you know what, I got another chance. So the people who want another chance are going to be balanced against the people who say, I've rung the register, and you're going to get a bottom, but the market's going to have to be more oversold, and we're not there yet. Watch the transports. Watch Micron. Watch Abercrombie, which was up on good news. Watch Humana, okay? Humana has to hold, all right? And these are the stocks I'm keying on, Micron in particular.
Let's talk about Facebook because they just announced restructuring, and I'm wondering...
Very problematic. The stock had run the most, and everyone's decided, you read that story, and that story is a bit of PR, that Facebook's going to protect your privacy. What really matters is that people feel that that's going to crimp their margins. Now, Zuckerberg was in town last week talking about how they're going to spend much less. So I think that Z-Man is telling a good story on the margins, but this is going to hurt top line. My take is let it come in, okay? Let it come in. Don't touch it yet. Because when you do something that is all about privacy, people think that means less revenue. Let that story percolate, and then maybe we buy it.
If consumers can't trust the stock, though, can investors?
Yes, easily. Because the consumer, the packaged goods stocks, the companies never left Facebook. They never left it. No more than they left Alphabet. These are false narratives. I actually deal with the companies. The media doesn't have any relations with those companies. They don't talk to them. I mean, that's what I do. It's kind of like my job. My job's different from their job. I have no thesis, okay? I do not have a thesis when I approach these stories.
Now, before we head over to Action Alerts Plus Daily Rundown, I want to ask you an investing education question.
Sure.
And this has to do with the column that you wrote yesterday afternoon. So I want you, first of all, to break down what FOBs is.
Well, what FOB is? Okay, well, what happened?
The acronym stands for.
Yeah, fear of big sellers. So the education point here that I want to make is that you must understand that when you see a stock go down, don't necessarily presume that the company's doing badly. There are the mechanics of money management that makes it so that there are investors who just go to their trading desk and say, I don't want to lose any more money. Lock in plus 10%. Just lock in plus 10%. So it's up to the trader to try to figure out how to lock that in. Typically, the trader doesn't want to get yelled at, worried about her bonus or his bonus, so they sell everything. And what you're seeing is a lock-in. So don't ever confuse the direction of a stock with the fundamentals of the company. They tend to diverge in moments like this.
All right, and I hear that you have an Action Alerts Plus call next week?
Yes, we do, and we moved to Thursday, and I think we'll give you some rules for how to manage expectations. Yeah, expectations rules.
All right, we got to head over to the Daily Rundown because I want to talk about Amazon's new push.
Sure.
All right, guys, thanks for joining us.